Here's how you could have doubled your investment on NVDA today, trading put options. But first, let's talk about the stock. This morning, April 17th, 2024, NVDA gapped up a bit from yesterday's close, but it wasn't really enough for me to be bullish on the stock because it's still under the 20-day moving average on the daily chart, and the NASDAQ 100 is under the 50-day moving average. So it's really not a good environment for longs right now. And I'm not really interested in going long NVIDIA until we get back over that $900 area. Since we're still in a downtrend, you'll notice that any spikes tend to be met with selling. So as NVIDIA opened and spiked into the Bollinger Band, right in this area here, I'm looking for any sign of weakness and failed follow through at that area. What ends up happening is the first 10 minutes, we're sort of stuck in this range between 887 and 880. This is a great setup for an ORB, otherwise known as an opening range breakout or opening range breakdown. Once that opening range is set, I look to take entries on the first candle to break that range, and we'll set my stop at the high of that breakdown candle. This is an opening range breakdown. Once I'm in the trade, I'm really just looking for reasons to exit. And those reasons are, one, either my stop is hit. In this case, the entry would have been around 881 area with the stop above this candle at 884, 885. So roughly about $4 stop. The other reason I'll exit is if price moves in the direction of the trade, I'll start to scale out of a half, maybe 3/4 of the position as it moves about 3 times the distance of my entry versus my stop. In this case, the stop was $4 from the entry area. So for the trade to make sense, we'll need to make 3 times that, which is $12 a share, to maintain that 3-to-1 risk versus reward target. And that's generally what I target for profits on my trades. Once I've scaled out of a good portion of the position, I like to hold the rest until we either get a large washout, in which case I'll exit on the first candle to break the high of the previous candle, which you see in this area right here. Or if the stock starts to make higher lows on the 3-minute chart, I'll also take profits on that last portion of the position. In this particular case, we got that $12 move about 20 minutes from that original breakdown area. We hit 868 just before 10 a.m. From there, we don't really see a convincing higher low until about 1:30 in the afternoon, right in this area when the stock is trading at 850. So you could have held a portion of the trade all the way down to 850, making around $30 a share. But trading the stock requires a pretty large account and takes a lot of buying power because it's a $800 stock. And if you don't have that kind of buying power, you can still profit off of this move by trading on the option side of things. Let's look at the 850 put. Buying puts lets you profit as the stock is going down. And as the stock is going down, the put option is going up. If you had bought the 850 put option around the same time as the stock had the ORB, opening range breakdown, you would have opened your trade right around the $4 area as these option contracts were breaking out. From there, you could have set your stop down in the $3 area, giving yourself a $1 stop. And maintaining that 3-to-1 risk to reward target means you need to make about $3 per contract in order to make the trade make sense. We got that $3 move, maybe about within about 20 minutes or so. You could have scaled out half or maybe 3/4 of the position into the $7 range and just held the rest until the first lower high when the option contract was trading around $9. Or if you were watching the stock and waiting for that first higher low on the stock, you could have held to when the option contract was trading around $13, right in this area at 1:30 in the afternoon. But even if you had only held on to the $9 area, you would have had more than doubled your initial investment when you opened the trade. And that's the power of trading stock options.